oh my God, it's just going to get worse and worse and worse. The only thing that could save us, I guess, so I expect prices to go much, much higher, is extremely bullish for gold. What's actually happening is the Fed already lost the inflation war, and that's what these hot inflation numbers are showing you. As inflation is accelerating, real interest rates are falling. Real rates are coming down, and that's very bullish for gold. And in fact, runaway inflation that the Fed can't control.
Gold is dropping, silver is holding steady, and inflation keeps running hot. But what's really happening behind the scenes? Peter Schiff exposes the market manipulation, the Fed's losing battle against inflation, and why silver might be setting up for a major breakout. If you think gold's next move is big, wait till you hear what's coming for silver.
Yeah, I mean, what I think might have happened is there was some people that were buying silver, and then some people decided to sell gold to cover their silver shorts because they had long gold, and that started bringing down the price of gold. And then silver eventually followed gold, and gold was down like $40. Silver, was about unchanged on the day. But that still is significant if you're, because a long gold, short silver bet is kind of a bearish bet on the whole complex. When things are really going to get interesting is when people start going long silver and short gold to hedge their long silver. Mm-hmm. Because normally in a bull market, silver is outshining gold. And I expect that to happen as this ratio, closes. I mean, right now gold's down about $50 and silver's down 4 cents. So about unchanged. See, normally that wouldn't be the case. Gold down $50, silver would be down $1.50. Right. So there is a lot of unwinding going on, I think, behind the scenes here. But also, we got some hotter than expected inflation news again today, the third time in a row. And, I think that initially knocked gold down, the big pop in export prices. But again, the markets have got that wrong. High inflation is good for gold. It's not bad. The reason they think it's bad for gold is whenever the algorithms, they've been programmed, when inflation comes out hotter than expected, you sell gold. Why? Well, that just means the Fed is going to have to keep rates higher for longer to win the inflation war. And those higher rates are what's going to hurt gold. But what's actually happening is the Fed already lost the inflation war, and that's what these hot inflation numbers are showing you. Because the Fed should be hiking, and they're not. And because the Fed is not hiking, as inflation is accelerating, real interest rates are falling. Doesn't matter what they do with nominal rates, real rates are coming down. And that's very bullish for gold. And in fact, runaway inflation that the Fed can't control is extremely bullish for gold. And that's where we are. The average inflation lasted for just a few months, and then the Fed put that away as soon as they realized how high inflation was. But the interesting thing about this 2% inflation target is it never existed when inflation was above 2%. The Fed only rolled it out when it was like 1.5%. And they said, hey, we don't have enough. We need to get it up to 2%. But when it was 3 or 4, they never said, oh, no, we need to jack up rates to get it down to 2%. Right? They only invented the target when it served their purpose, which was to create more inflation. But now they're kind of stuck with it. But I don't know that we're ever going to be back at 2%. So either they're going to raise the target, which for now they're saying, no, we're not going to do. They could, of course, jerry-rig the CPI again to rig it so that the numbers are lower. They already did that with the Boston Commission. So even when inflation is measured by the CPI, right, even when it was 1.5%, it was probably 3 or 4. So we never really had inflation below 2% anyway. Where they got this 2%, right? They got it from the Central Bank of New Zealand, which introduced 2% as a ceiling in the 80s. And it was a ceiling, not a target. So it wasn't like if inflation is 0.5%, you need to get it up to 2%. It meant if it was 0.5%, everything was good. No problem. But if it got close to 2%, they had to do something because it had to stay below 2%, right? It was never, try to get it up there. It was, the lower the better. But they took that and redefined it, as their mandate. But they have no such mandate. They made it up. Their mandate is price stability. Prices that go up 2% a year are not stable. They're going up every year. Stable, if you go to the dictionary and look it up, it's like it's the same, unchanged. So the target should be 0, right? If they want stability, not 2%. And yeah, I mean, if some years prices go up 2%, they should have to go down 2% the other years in order to keep it stable, right? So, it's done well. And so I think it's a good portfolio insurance. It's something that I think if you add it to your portfolio, it reduces the overall risk of the portfolio. So I think these insurance companies would probably want to have some gold in their portfolio. So sure, I think, they're, as a new buyer, it will, obviously at the margin impact the price. I don't know how much they're going to buy, but I do believe that over time, a lot of institutions that are not buying gold will start buying it. I mean, the reason that gold has gone up is because central banks have been buying. The public has been selling, especially in the U.S. and Western Europe. Maybe in China and India, they're probably still buying. But Americans are selling their gold. I mean, we had net outflows all year last year in GLD. We had net outflows in all the gold ETFs, GDX, GDXJ. We've had a pickup in net outflows of, not outflows, but redemption sales at Schiff Gold. We're getting a lot more people than we used to calling up and selling us their gold. Hey, gold's $2,900. Hey, let me sell some. I can use the money. We're not getting a big increase in people saying, oh my God, gold's $2,900. Let me buy it before it goes even higher, right? We're not getting the, oh my God, I got to buy. I'm afraid to miss out on more gains. I better sell while I can before the price goes down. So we don't have any kind of speculative fever surrounding gold mining stocks. It's the opposite. So it's the central banks that have been buying. That's one of the reasons that the gold silver ratio, I think, is 90-1, because the central banks don't buy silver. They don't have the room to store it. I mean, that's not what they want. They want gold. It's generally the public that buys silver. And so when the public wakes up to the real inflation threat, and when they realize that they've been sold a bill of goods with Bitcoin and other cryptos, they're going to be looking for gold and silver. And there's not a lot of it. The supply, especially with the central banks buying gold, but there's not a lot of silver out there. So I expect prices to go much, much higher when the Americans and the Europeans wake up to reality. And the reality they're going to wake up to is stagflation, and that, inflation is here to stay. Inflation is not going anywhere. The central banks spent over a decade deliberately creating inflation as a policy choice. That was their goal. Quantitative easing is just a euphemism for inflation. They said we need higher inflation, and we're going to print more money. We're going to let governments go deeper into debt. And I kept saying, you be careful what you wish for, because you're going to get a lot more inflation than you bargained for, and there's no way you're going to be able to stop it, right? You're not going to be able to turn the spigot off. And so that's where we are. This is going to be the most inflationary period of time that the United States, Europe, Japan have ever seen. It's going to be way worse than the 1970s, because we were in a position in 1980 to put the brakes on inflation, because we had Ronald Reagan, we had Paul Volcker, we jacked interest rates up to 20%. 20%. Now, the highest inflation ever got on the CPI was 13, yet we had 20% raise. So this cycle, we had inflation go to 9, and the highest we got was 5.25. Clearly not enough, right? So we didn't do what they did. And they brought about the worst recession since the Great Depression in the early 1980s. But when they did this, when they went on this inflation fight, debt to GDP was 30%, not 120%. The average maturity on the national debt was probably at least 20 years, not 4 years. The U.S. was still the world's biggest creditor nation, not the biggest debtor. We were still running trade surpluses in 1980, not massive trade deficits. So we are not in a position to survive the inflation fight the way we did in 1980. So we were in a position, and we had the ability to end it. And the stock market in 1980, the Dow was what, 7-8 times earnings? I think the dividend yield maybe was 6% or something. I mean, the stock market was cheap. The Dow was under 1,000. The price of gold was 1,000. I mean, the gold and the Dow were the same price, right? I mean, you talk about cheap, right? I mean, it was as cheap as stocks were at the bottom of 1932, after the market crash. So we had cheap stocks. We had, interest rates were 13% on a 10-year treasury. So, we were in the opposite position that we're in today. We have no ability to wage a winning war against inflation. That's why we surrendered already. That's why the Fed started cutting, because 5.25% was too much to bear. So inflation is not going to end. It's just going to get worse and worse and worse. The only thing that could save us, I guess, would be AI and a massive productivity boom that could eventually bail us out. But that doesn't mean it's a bailout. It just means that we would have been much better off had we not had the inflation. But we could have such a massive productivity miracle that we could afford it, right? Because we'd be rich enough, we'd be productive enough to be able to deal with it.
Yeah.
But I don't know that that's going to happen quick enough. And the inflation that we have and the calamity that it unleashes, could really put on the back burner a lot of the AI, because we just don't have the capital to invest in it, because we squandered it.
Gold, silver, and inflation. This battle is far from over. If you found this breakdown valuable, don't forget to like the video, subscribe, and hit the bell icon so you never miss an update. Stay ahead of the markets, and we'll see you in the next one.